Mic 1, mic 2. Hey, what's going on, everybody? I'm Grady on the charts. And right now, I am trying to get my mind prepared for the week. We're going into this week, and we are fresh off of a long weekend. Now, for all of the newer traders, much like myself, or people who've come into this industry from other areas and other backgrounds, you guys, I think we sometimes prepare ourselves for work in different ways. Right. For me, this weekend has been extremely difficult to prepare for because I've had a bit of a comeback this week. So this week, excuse me, what was good about this week? And I think that's probably where I should start, about the things that were good about this week. The things that was good about this week is that we had some unbelievable volatility early on last week. And in that early volatility, I ended up hitting max drawdown one day, which put me down $2,000 in my trading account. And throughout the week, I was able to recoup those losses in a way that was consistent, that was steady, followed the rules very well. I was very pleased with the outcome. We were able to bring ourselves back into alignment with our account. So we ended up, let's see, how can I put this on the screen here today? I think I put it on the trading screen. And wait, hold on a second. First, I'll come back here and I'll get everything set up before we get on here. And this is really the only thing that I really wanted to take a look at here, is the way that early on in the week, P&L took an immediate fall, $2,000. Okay. Now, one of the things that we have to remind ourselves is that when we take these types of losses, all types of things can go through our heads. Types of things go through our minds. If we've ever blown accounts before, if we've ever gone into deep drawdown and then basically just threw our hands up and gave up. These are those types of scenarios sometimes that hit us the worst, right? And sometimes that, we'll reach back and we'll think about something that happened in the past and we're like, no, not again. I don't want to go through this again. This is too much for me. These things kind of go through our heads. But take a look at the mentorship, 2016-2017 mentorship for ICT. And there is a loss mitigation strategy there. There's a drawdown mitigation strategy there. And I think that I tapped into that very well to create a slow, gradual rise from that immediate fall. Okay. So now what I'm looking at here is my Top Step account, my Combine account. And on April 9th, we went down $2,050. Let's see if I try to blow it up so I can see it clearer. There we go. We went down $2,055. Yeah, next day we came back and we were able to recoup $734 off of a decent amount of contracts. I did not trade a lot of contracts. Is one thing that I'm extremely proud about and what I would like to continue to do moving forward. Now, for many people, they say, well, you took a lot of trades. For me, a lot of trades has been upwards of 40, right? 40 contracts back and forth. I would have had certain days where I could have gone down $1,800 and then begin to trade my way out of that drawdown all in the same day. And maybe I ended the day profitable, or maybe I was out of there, but then I ended up being stopped out or hitting my max drawdown around 30, 40 contracts in. But this time, as we're progressing, this is what profitability is made out of for us. And the reason I say that is one of the things I struggled with this weekend, and I'm not sure if you struggled with it, is I saw a lot of traders posting their first quarter, posting their first month, posting their first 51 days, and they were pulling in. I think Ross Cameron made over $1 million in his first 51 days, and other traders were having banner quarters. They were doing some amazing stuff. But I believe what I wanted to remind myself of, excuse me, is their current success is based on this type of foundation, this type of trading foundation. If there's anybody who's telling you that they've gotten into the market and from day one it's been nothing but moonshots the whole time, that's highly improbable, highly unlikely. And I don't think that is something that we should, as traders, really promote for earlier traders. Or when I call myself a young trader, right? I call myself a young trader, but I mean young as far as being consistent. If you've never had consistency in trading, you're a young trader. Right? If you say, I've been trading for 2 years and I haven't found consistency yet, you're a young trader, right? So if you found your model and you're trading that consistently and you're finding profitability in that consistently, then you're no longer a young trader, right? You're more of a seasoned trader at that point. But at my current era, I am basically break even. I'm basically a break even trader. Which means what? Which means that I've passed multiple combines. I've lost multiple combines, right? I've lost many combines. I've passed multiple combines, but I've not been able to sustain a funded account. So I'm a young trader. I'm early on in my routine. If you are, one of the things you want to make sure you do is keep your trading down to a minimum. And when you're experiencing this type of imbalance in your account, where it is asymmetrical, where your losses are much larger than your wins, the only way to get back on track is to take steady wins to get back the losses. And then we all know the psychological benefit of being up. The psychological benefit for us being up is what? There's a lot less pressure. We're not thinking about blowing accounts. We're not thinking about over trading, which is let me be clear about that. We're thinking about those things in a much more proactive and productive way than when we're in deep drawdown. When we're in deep drawdown, every contract has much more weight on it. So to this day, let's see. This is our P&L high. Go ahead and minimize this as much as we can so we can see what we want to see. We want to see the net P&L, the P&L high, P&L low. Right? The P&L low means that this is a day that I went down and I had to dig myself out of an early loss, because last week we did have several early losses. One day last week, I completely misread the bias on the pre-market and I was prepared to go short, and the market was primed for a long, and then right off the open it took off, right? So we'll see that here. So it doesn't mean that on our profitable days we're going to be 100% profitable. Yes, we're going to take a trade or two. We're going to maintain control of that, no over trading. And going forward, we want to make sure that we get our base hits. On April 11th, I didn't really like the market at all. I shut it down when I finally got back to $2.52 a drawdown. Now, my deepest drawdown on that day was only $79.84, but when I took a couple more trades and I got back to with under $3, I cut it short. Nothing about that day seemed to go my way. It was very choppy. Every trade that I put on, I was stopped out of. So I said, you know what, I'm gonna call that a day. April 14th, I think we took one or two trades early on that did not go our way, but we were still able to end up in that day out in the green, up $636.14. Similarly, on the 15th, we came in and we went down early and we went down strong, down $169. P&L high of that day was 73. And I think, yeah, I took like one more trade, went down $5 more, and then we called it a day. For me, those are my winning days. And it doesn't seem like it. It does not seem like it. But it's winning for me because I'm looking at the number of total contracts that I have. And then I'm saying to myself, I could have continued to trade, right? This could say 25 contracts with total commissions more than $22 in this line. But we cut that short. And it's that type of discipline that was really one of the shining lights for me last week. This next day was a harder day because even coming into the 17th, and I'll get to the 17th, coming into the 17th, these 2 days together started feeling like a cloud over my head. And for you, it might feel like that too, right? Whoa, two days in a row where I'm having losing days, right? Where I'm exiting the market and I'm unable to take home a profit. My P&L high on that day was only $10.66, right? So we got down to a low of $132, and we said, look, we're digging our way out of drawdown. It won't help us. It won't help us to keep digging. So we're going to stop, come back tomorrow. So when we came back on Thursday, was not Friday, it was Thursday, because Friday was a holiday. When we came back, we were able to pull in $319, and our low on the P&L was 50. But it just shows that even that day, we started out with a little bit of drawdown on our account, and we were able to not allow that to trigger us into the mindset that we were possibly going to have to endure more drawdown. Okay. But what if we were, right? What if that was just going to be the case and we were going to have more drawdown? Well, what we needed to do is we needed to remain constant, remain consistent, remain stable, not letting fear or greed or FOMO or any of these triggers take us off of our game. But the first and foremost thing that we wanted to do is keep our drawdown low. And as long as we could keep our drawdown low, then that gives us an opportunity to do what? That gives us an opportunity to come back to these days where we can work toward profitability and making sure that the ratio between our highest low day and our lowest high day, makes no sense. That's not right. Our highest low day and our highest high day remains consistent. So this ratio is inverted. So our profits are below our drawdown. That's not good. These 2 days, our profit outweighs our drawdown. These 2 days, our profit outweighs these 2 days of drawdown. So that's what we're working on going into the new week. Now this isn't quite chart analysis, right? Because this is a separate part of this trading strategy. It's not necessarily all about what's happening on the charts as what's happening in our hearts, right? So making sure that our psychology is attended to even before we start that first day of trading is extremely important. Why? Because we never know when we see someone else's losses or somebody else's wins that really just gives us that certain something that has us thinking, I'm going to be more timid, or I'm going to be super aggressive. I want to make that type of trade. I want to have that type of profit, right? If I could come into the market tomorrow and I can just load the boat, everybody will see how great of a trader I am, which is the wrong motivation. The right motivation is very mathematical. Manage the risk and move forward. That's what we're going to do for tomorrow. Tomorrow's Monday. And as we do on Monday, we're going to approach the market tea sweetened with apples. Tomorrow we're gonna approach the market very what's the word I'm gonna say? Defensively. Okay. We're gonna approach the market in a way where we're gonna feel out how it's going to perform. We're gonna be very conscious of the ranges that it's moving in, and then we are going to address the market appropriately, right? We're gonna see what's happening before we get involved, right? But before we did that, we wanted to take a look at the trader, then we'll take a look at the trade. If the trader's not set up properly, the trade can't be set up properly. We can pull in huge profits with the wrong mindset, approach, and motivation, and then we'll start habits for us earlier traders that's going to go further into the future. And every time we'll sit down thinking about loss. We'll sit down thinking about outrageous gain. We'll sit down thinking about our past trades. We'll sit down thinking about that Lambo we're going to buy. And none of those things are going to help us when our psychology is tilted. Okay. So good luck this week, going into this week. Be patient and disciplined. Continue to study. Continue to take notes. If you're not recording your videos or recording your trades, record your trades. Document your inputs. Document your thought process. Verbalize it. Take notes. Write it down as you're trading, so you can review that trader and say, whoa, the person who sat down and took the trades today is not the same person who sat down and took the trades, when last week when I was on that run. When I was on that run and everything was hitting, that person is not sitting here today. That person was only thinking about the levels, the numbers, the liquidity, the gaps, the ranges, was only thinking about the technicals and thinking about the risk management. The trader today has other things on their mind. Address those things, bring them all out, lay them all out, journal them all out, acknowledge that they are there, set those things in their proper perspective, and then go ahead and trade profitably. You guys got this, right? If you've been putting in the work will show on the charts. Whether it's huge gains or even better, minuscule losses, tiny losses. If you only made $20 per trade, but you could keep every loss down to $5, sustain that. Sustain that. Keep that going. Okay, guys. I'm Grady on the charts. Catch my live stream in the morning. If you guys have, this is a Sunday for 20th, and I'll be streaming live on Monday, April 21st. If you guys catch this video before then, you guys go ahead and join me. I appreciate you stopping in, like and subscribe, and I'll see you guys on the charts. I'm Grady. Bye-bye.